Right, the Fed out with its report on why Silicon Valley Bank failed, calling it, quote, a textbook case of mismanagement. The Fed's Vice Chair for Supervision, Michael Barr, saying senior leadership failed to manage basic interest rate and liquidity risk. Yahoo Finance's Julie Hyman is here with us with the latest. Hey, Julie.
Hi, Rochelle. Well, the blame is not just laid at the feet of management of Silicon Valley Bank in this relatively scathing report here from Michael Barr, that Vice Chair for Supervision at the Fed. In addition to management saying that they failed to manage their risks, it was also supervisors, bank supervisors, who did not fully appreciate the extent of the vulnerabilities at the bank, even as those vulnerabilities worsened. And then the report finds once the supervisors did realize what was going on, they did not take enough steps to make Silicon Valley Bank fix the problems that we had. And then finally, that basically the way that the Federal Reserve Board had structured supervision was also at fault here and limited the ability of those supervisors to take measures. And so essentially, Barr is saying now what needs to happen is some changes need to occur on the regulatory front in order to make sure that something like this doesn't happen again. And he's talking about that he would potentially undo some of the rules that we have seen governing regional banks. Remember that were loosened in part because of lobbying of banks like SVB at the end of the last decade. So a lot to go through here in this report, but the big picture takeaway is that, yes, management was definitely at fault here, but it was also the system that failed the bank as well and supervision of the bank that failed.